Our next presenter is Mr. Josh Olfert. He's going to speak about a Millennium's Guide to Prospecting in the 21st Century. Josh has been featured in Business Insider, the Globe and Mail, in regards to investment and personal finance as an expert. At the age of 20, Josh went out and started his own financial firm, Haven Wealth Management. He's got 175 clients, and he's got a mission to get them to take action to secure their particular futures. Now at the age of 22, Josh is looking to become one of the youngest CFP in Canada. Josh brings a unique understanding to what people want and how to interact with clients in the 21st century. So without further ado, please welcome Mr. Josh Olfert.
Thank you very much. Awesome. Thank you so much, everybody, for having me. As weird as it may seem, I've actually always dreamt of being here on a stage and having a voice in this industry. As weird as that sounds, not many kids dream of being a financial planner. But just by giving me a little bit of your time today, you're helping me achieve a dream of mine. So I wanted to say thank you very much for being here. Hopefully I can provide you guys a little bit of insight, a little bit of value for your businesses, even though you've been in it much longer than I have. So who am I? As previously mentioned, my name is Josh. I'm 22 years old. Actually, I just turned 23, but when I wrote this, I was 22. And I am the founder of an independent wealth management firm called Haven. And we have about 175, now it's a little closer to 200, fee-based financial planning clients. We have a growing team. We just brought on another 2 individuals to help us grow and expand and build the business. Now, an interesting thing is the path that I took. So I never went to university, never got a degree. I was an autodidact. I learned things on my own because I was so curious and passionate about it. And another thing to know is that the business that we've created here is 100% organic. We never had, never purchased a book, never had any senior advisor passing us business, although I had some fantastic mentors, had some great business development managers and people who really helped me just become the advisor I am. And so today I kind of want to present you with a problem, and hopefully you can help me solve a few of them. And I want you to think through how you would solve these issues. How does someone who has no university degree, is very young, and really has no chops in the industry whatsoever, start a financial planning practice when they're young, they don't have the credibility? And I mean, who here remembers how hard those first few years were in the business? Right? So we got a few hands up. It's not easy. Like, it's pretty nuts, especially when you're starting with a bit of a disadvantage. So that's the first problem to think through, is how does someone in that scenario survive, never mind even thrive in the business? Second problem I want to present you with is the problem I have today. And the problem I have today is that I have a list here, and this is my old CRM, not very technical. It was a spreadsheet. And this is the CRM of all the clients or the prospects that we haven't been able to get to yet. And not to overstep my bounds or anything, but we're in a position where we have too many prospects that we don't know what to do with them. So that's why we're expanding the team, and that's why we're trying to figure out how we can make our processes more efficient to actually get to all these clients. As mentioned in the introduction, this past summer, I was committing most of my time to completing my CFP and doing the capstone course and all those things. So this list just kind of continued to grow. And the funny thing is that if I decide that one month, we're financial planners, so if we're going to take one of these clients, we're going to do 3 meetings with them. We're going to do an introduction, we're going to do the analysis, we're going to sit down with a recommendation, and then we're also going to implement it for them. So to meet with or take 10 of these clients requires 30 meetings. So potentially I could sit down with 10 of these prospects one month, and we could get through those, great. But then by the time those are all finished, there's 10 more on the list. And we're getting this inbound stream that doesn't seem to dry up, which is pretty insane. I never really expected this to happen, to be honest. And it's an interesting dichotomy there. How did we go from a position where we're not even sure if we're going to survive to being in a position where we don't know what to do with the prospects coming in? And this isn't as great as it seems. Not all these people are ultra high net worth clients that are going to be great for our business. When we sit down with 100 of these, only 50% of them might close. Some of them might not even be interested anymore. But what we're finding is that out of these 180 or so people, probably about a third of them will end up becoming clients after doing all the work and due diligence. So how did we get here? And I think that's the discussion today, is talking to you guys, how did we get to this position and how did we bridge the gap between survival and now abundance, I guess you could say, in terms of opportunities. So I guess that would require me to tell a little bit of my story and how we got here. So I was always a volleyball player. That was my passion in life. I loved playing sports. That's what I did throughout high school. That was my full-time job. I played all the time, represented Manitoba on multiple club teams, won a bunch of championships, and it was what I loved. And what that allowed me to do is it gave me this unique privilege where I think I was about 15 years old, the first time that my parents got tapped on the shoulder at a national championship tournament and by a college scout. And the college scout said, "Hey, has your son thought about where he might want to go for university?" And when my parents told me this, things got real very quickly. I was living in my teenage fantasy world of just playing sports all the time and not really paying attention in school or any of that. And all of a sudden, things became real in a sense where I had to decide where I might want my life to go. If I'm going to get a degree, I've got to know what I'm going to specialize in. What is it that I want to do? Those sorts of questions. And when you have those sorts of questions, I did what every ambitious, young, smart gentleman would do when he has a question to lay before the feet of God. I went to Google. And I literally, I kid you not, I typed that in. I typed in highest paying job, least amount of school, or least amount of work, something to that effect. So it gives you a sense of who I was as a kid. And I wanted to make a lot of money, have a great lifestyle, and not really work that hard. And this isn't going where you think it's going, gladly. So what did Google recommend for me? Well, I apologize if your spouse or someone you know or someone you love does this. Google said, become a pharmacist. Because you'll do a quick 4 or 5 year degree, you'll get a certification, take some training, and then you sit behind a counter, make 100 grand. It's fantastic. I want to be a pharmacist. That's where my mind was at, because that's what I wanted to do. It was going to be great. And my dad, in his wisdom, thank God, when I was having this dialogue about what I wanted to do, he said, "Josh, before you decide what it is that you want to do with your career or your work or your money or all these things, I want you to read this book." And I said, "Okay, sure, Dad, like, whatever." He's like, "No, seriously, like, if you read this, it'll teach you all the things that I wish I had done when I was your age." I said, "Sure, whatever." I put it in the stack of other books he had recommended I read one day. And, but deep down, I wasn't really sure if I wanted to do this. You know, I was in it for the wrong reasons. And I decided, you know what, maybe I should open up this book. So I opened up the book one night, read the first page, read the second page, read the third page. Mind you, I've never read a book in my life to this point. Fourth page, and I finished that entire book in one night. And it was like I snapped and I knew exactly what it was I wanted to do. And that book was called Rich Dad, Poor Dad. And many of you have read it, and if you haven't, I highly recommend it. Give it to your kids. Give it to people who want to have the base understanding about financial planning and what it means. What this book taught me was you don't have to follow the conventional path of life. You can kind of chart your own path, and you can do what it is that you want. And if you're willing to put in the work and have the discipline, you can kind of do things your way if you so choose. It's a little riskier, but you can. And what it also taught me is that you can make money by making the world a better place. You can become an entrepreneur and build a product or have a service that people want, and you can earn a living doing that. How cool is that? That seemed like the coolest idea ever to me. So I became absolutely fascinated with this. The last thing it taught me was this idea of financial independence. You could be in a position where if you manage your assets well enough and you manage your employment income well enough, you can replace the need to trade labor or trade time for money or an income. You can actually trade assets. You can trade money for more money. It's the whole idea of investments or dividends or rental properties or having businesses that create passive income. I was like, this is so cool. Like, this is the greatest thing ever. So the next day, I baffled everyone I knew in my family when I went out to the library, and I went out to Chapters and Amazon.com, and I picked up every single book I could find on investing in personal finance. And these were some of the first books I ever read. And I fell in love with this concept. It was so cool, and I became, for lack of a better word, obsessed with investing and obsessed with financial planning. And that's kind of the seeds of where this whole thing started. That would have been probably around 2010, so about 8 years ago. Now, The easiest thing for a young kid to do to get involved in the business world is to invest, because there's no barriers to entry. You don't have to start your own business. You can take a little bit of money, which is meaningful to you. Maybe at that time when I was 16, it would have been $1,000. And I took that money and I got a brokerage account, and it looks like this is a picture of me in front of the 3 screens I bought. I just wanted to be a Wall Street trader so bad. It's hilarious because if any of you know about investing understand that technical analysis doesn't work, and that's what those charts are. So you can see how misguided I was. But anyways, that's where it all started. And I would do these things throughout high school. I would start small businesses. I would build websites for businesses and charge them a fee. Or I would put up a website, try to attract attention, and sell ads on it. Affiliate marketing, all these types of things. My friends and I would try to build apps. Some of them were lucrative to me in the moment. When I was a young kid, making a couple $100 extra bucks or $1,000 was a big deal. But I would take all that money and I would put it into the stock market. I would never go out for dinner with my friends. I would never do the expensive things. I would take all that money and I would put it into my investment account. And when I read The Intelligent Investor by Benjamin Graham, which is probably the best book on investing probably ever written, one of at least, it said that Warren Buffett got 21.9% compounded annual return throughout his career. And I started there, if you can see at that point, and I was getting 26% because I was taking a lot of risk and I was in just a pure bull market, and I thought to myself, I'm Warren Buffett. This is crazy. Little did I know, I had no idea what a Sharpe ratio was, I had no idea what risk-adjusted returns meant. I was pretty much trying to shoot the lights out, and because the market was doing well, I was too. Now, what that allowed me to do throughout high school, putting all that money away, and having it compounded at such a high rate and taking a little too much risk, it allowed me to buy my first rental property shortly after I got out of high school. So I bought this place. It's in the west end of Winnipeg, and it was so weird. I bought this place, and obviously with a co-signer, my dad, I had no credit history or anything like that. Bought this property, and I remember picking up that first rent check and thinking to myself, like, hey, these people are happy to be here. They're glad that I'm providing them a place to stay, and then they're going to pay me enough money to cover all the expenses, and there's cash flow left after. Like, this is the coolest thing ever. So this whole idea of investment and capitalism, this whole phenomenon just infiltrated my mind. Now, who's ever had that feeling where you learn something cool and you just want to tell everybody about it? You just want to tell everyone. That's where I was at. So, like I said, I thought I was Warren Buffett. I was very overeager, and I decided I'm going to start writing and teaching other people about investing, teaching other people about financial planning. So I'd write little blogs like this. Graduating, question mark, here's your financial checklist. Kind of directed towards my target market, people are graduating university or that kind of thing. And I started blogging a lot, and every single day I would write. I would record a podcast into my phone and publish it online. I would write blogs, write articles, do whatever I could to educate people and almost show off the stuff I had learned, which wasn't that much at that point. I would also share content from around the web. So this is a really cool graphic that I just randomly came across. It's like investors, know what you can control. There's 4 things you can really control when you're investing: risk, cost, time, and behavior. The return you can't control. There's so much randomness involved in that. But it's funny because investors focus on return and they don't focus on the things they can control. So little pieces like this isn't the topic of my discussion, but little things like this I would always share. I would share them online and I would show them to my friends and say, this is what real investing is about. And I would do my best to educate people. I was always sharing stuff. I was always sharing content. Now, when I was, I believe, just out of high school, or maybe even in high school, kind of my timeline's a little loose, I was getting so many inbound questions through email, through text, through whatever it was. People were asking me, Josh, I've read your blog, you've got this rental property, you're young, you've got this investment track record, you've read all these books, like, I want to learn about investing too. I want you to teach me more about that. I want to learn what you've learned. Like, can you teach me? And it got to the point where I was getting these messages every week, and it would seem like there was a need for it. So what I did was, I thought, okay, the little capitalist I am, I'm going to write a little book, and I'm going to put it online, and I'm going to sell it for 20 bucks. And whoever wants to ask me again to learn about investing and learn about finance, I'm just going to send them a free copy of the book, and who knows what I'll do. So the book was called Everything They Told You Was Wrong. That was so insane. Wealth principles you won't learn in the classroom. So again, you could see what my experience in school was like. But I really just wanted to teach people about how you could go down a different path, your own path. So this is what really, I guess, what I would say launched my career, if you could call it that. as I had accumulated more and more viewers on this blog and more people were interested in reading it, it got up to the point where there was about 10,000 monthly readers on this thing. And I didn't really, to be honest, know that much about what I was talking about because I was pretty much regurgitating stuff I had read in books and talking about my investment experience. But the Business Insider, I got pinged one day in my email, and it was this wonderful reporter there, and she said, hey, we're doing this list. It's called the 20 under 20 kids in finance in the world, and we want you to be on it. And I was completely taken aback. I was blown away. I'm like, that's so cool. In this period of a short few years, I went from not really knowing anything, just playing sports and screwing around, for lack of a better term. And now I'm on this list that's like nationally recognized for finance people. That was so interesting. Then when the Winnipeg Free Press saw that there was a kid from the list on there, they featured me as well. I really needed a haircut, but guess I didn't get one. And when the Globe and Mail had seen that, they decided to do a piece on me as well. And I had this weird little media frenzy, you could say, for 6 months or so while people started picking up this story. And if any of you have seen Wolf of Wall Street, Donnie is the crazy cold caller. And that really shows what I became afterwards. What happened with all this, I had these articles in the press, I had this book I had kind of semi-published, I had a rental property, I had an investment track record. And what I did is I put that in a zip folder, and I cold emailed every single financial advisor I could find in Winnipeg on Google. Google's a big part of my life, apparently. And what I was trying to do was learn more about this business. Since there were so many people trying to come to ask me what they should do with their money or how they should invest, I thought, well, if I want to be an entrepreneur and I want this to be my journey, maybe what my calling to do as a business is to help people learn how to invest and help people learn how to plan out their finances. So I started immediately sending out emails and just trying to figure out if I could go for coffee with one of these advisors and learn a little bit more about the business. So of all the emails I sent, I would say likely 60% never responded. So check your spam folders from 2013. There's probably something in there from me. But 20% probably never got back to me. Or sorry, 60% never got back. 20% or so took the time to actually write back like, hey, you're a loser, go to college, kid. And then, which is fine, like I probably deserved it. And then the other 20% were like, you know what, this is actually kind of interesting, like, let's go for coffee. And those 4 or 5 people became some of the most important mentors to me in this business, and they really helped me. And I'm forever grateful for them that they would take some kid who thought he knew everything and kind of educate him about the real world and put him in his place, for lack of a better word. So after that, through those relationships that I developed through those emails, I got a few different offers to work in different, mostly mutual fund dealer firms. And I started with one of them, and it was a great experience. I started building my book and taking all those leads I had from those articles and the book downloads, and I started taking them on as clients. And since then, my life has just been delving further and further into this business, and I love it. And if anybody does anyone know what this is? This is Warren Buffett's house. That's how creepy I am. So I drove with a few buddies through Omaha to go to the annual shareholders meeting, because he holds a shareholders meeting every year that's all the who's who of the investment world are there. And I brought my copy of The Intelligent Investor, which is a book that is very close to his heart. He wrote the introduction to, and we took a picture outside his house. Also, while I was there, I ran into this gentleman. And this gentleman's name is Jack Bogle. And Jack Bogle is, if anybody's heard of it, passive investing or indexing. He's the inventor of that. He started a company called Vanguard. And I remember I was sitting at my table one day, and Jack Bogle sits down the table across from me, and I started, like a girl at a Justin Bieber concert. I started freaking out, and I got to meet him. It was one of the coolest experiences of my life. And there's some other figures from the Winnipeg financial community there with me. In addition to that, I got to meet guys like Jason Zweig. Jason Zweig is probably one of the all-time investment journalists ever, potentially. He's the top writer for the Wall Street Journal, and he's just a great financial journalist. And through these relationships and through meeting people and going on these events and learning what I could learn in the business, I started Haven, and this is what we look like. This is our brand. And our mission every day is to maximize the meaning in people's lives through the way that they use their money. And the way that I'm trying to do that is use a lot of technology, use a lot of automation, using, in the future, artificial intelligence, or whatever we can do to help simplify or make the process better for financial advisors and make it better for their clients.